Hey there, pro traders, and welcome to a one-day late market review. So it's not a Monday market review; it's Tuesday. Apologies for the delay yesterday. We've had big storms down in this beautiful part of the world that we live in, between the mountains and the oceans, the Southern Cape. Big storms, and now and again that affects things like our electricity supply and internet. It's one of the questions folks have actually asked me many times: how do we actually deal with that? Well, all of our trading actually takes place on VPSs, virtual private servers, very close to our brokers, where those are. So all of that happens there, and it happens. We have our trade managers, which look after all of the admin and even the taking of our trades based on our selection criteria and so on. So we don't need to be connected all of the time. And it's actually a good thing as well, because in many respects, it helps to take one's focus away from what's happening with the trades. As many of you know who have done my training at GoPro Trading Academy and on the other courses that I've done as a consultant as well, you will understand that we don't try to predict the market. We have an advanced dice rolling mechanism, if you want to call it that, where we have a significant edge over the market, and our number one priority is to work that edge consistently, regardless of what is happening with individual trades. And in fact, I'd say that what has happened over the last week is probably quite a good teaching example for exactly this point, where we can see how conditions changed quite significantly across some of the pairs, which you would expect on an ongoing basis, but I've got some good examples for you. And as conditions change, it means that what you do changes. And as long as you have a rule set that you can follow, where you know that for whatever happens, you know exactly what you need to do, it really helps to have that rule set so that you don't need to second guess what the right thing is to do. And certainly that is what we teach here at the Academy. So once again, as always, if you're getting value out of the material that I'm giving to you, I'd appreciate it if you can like the video, and don't forget to subscribe to the channel and hit that notifications bell so that you know when we bring out new material. It is my goal to bring professional level training material to you to help you achieve your trading goals. So again, make sure you hit that notifications bell. All right, let's start with Euro USD. Quick look firstly at the weekly, of course, where you could see that we, as we know, we had that breakout the week before last. And we're well outside of our HTC channel. We don't have a valid class 1M pattern on this time frame, but for channel traders, certainly it's been something that has produced valid trading conditions for core strategies. And you had to wait a little bit. And of course, last week we did have a pullback, which you need particularly for the daily impulse. And that was followed ultimately by a rollover. Now, what we've seen yesterday and today is a sort of a halt, if you like, in the bearish momentum. So for those of you who took a daily impulse on this one, you're still in the trade, but it's still wafting around, hasn't really provided a continuation of that bearish momentum in the last couple of days. It doesn't mean that it won't, but likewise, as I mentioned before, we don't bank on the outcome of individual trades anyway. Just looking quickly at the H4 time frame, we also had a setup for a hybrid. This is one of the trades that I did take. It didn't work out either. In fact, it was this morning where we finally got kicked out of the trade for very close to break even. Not quite, but very close. And what's interesting, again, is that the higher time frame 55 EMA has been providing some resistance over here, which we do expect in a trending market. All right, so that's it for the euro. We had even more action on the cable. Quickly looking at weekly again, you can see how last week's candle closed outside of the channel for the first time, unlike on the euro. But as soon as we were outside of the channel during the course of last week, you can see that channel line being all the way down here. We were already starting to look to take trades on this. So for those folks who trade the daily impulse and were willing to jump into a trade before the close of the weekly candle, but outside of that channel, we had a setup on Thursday morning, I think it was. So There would have been a short at market open as soon as the spreads came down, and you would have shorted that market. But in this trade as well, you've been able to trail your stop as well quite significantly using the 2-5-step rule. And should we get another bearish candle, which we don't at the moment, the way today is going, but it's still relatively, well, there's still plenty of time in the day. We'll be at break even on that trade relatively quickly. So that's the daily time frame. Of course, these conditions are perfect as a selection time frame as well, and have been for even longer. For the H4 time frame, last week we had a nice little H4 impulse, which went on to hit take profit. And then we've also had an overlay as well, of course, when that cyclicity broke down at the end of that bearish phase 1 wave, and that was a nice little winner. So we actually had a winner on both the core and the overlay. It often doesn't work that way. And then we had a resumption. Here you can see we had a bearish hybrid. That didn't work out either. It got stopped out for about a third of a loss. We're into a bearish H4 impulse now. And we've trailed the stop somewhat, but it's going, it's not really going very far at the moment. We should be able to get this one pretty close to break even before the end of the day, unless something really big takes place. All right, so that's the cable. Two of the nicer pairs for us to trade during the course of the last week and even at the moment. Right, so at long last, we had a breakout on the yen with the last week's close well outside of the channel. Also not a class 1 W pattern here, but nevertheless, a good solid breakout there. Now, we're still waiting for a pullback on this in order to be able to trade this with the execution time frame on daily. But if you're using daily for selection time frame, then all the way from Friday, you've been potentially looking at this as well. It was a bit late in the week for us to be able to jump into any trades. And not only that, we didn't have any valid pullbacks. You can see that really this market just continued going all the way up until this morning. So not much opportunity for us there, unfortunately. But looking forward, there may well be. So it's not over yet. Dollar Swiss, looking at the market testing outside of the resistance level on our HTC channel. But and certainly, if we were looking to trade a daily impulse, there is the possibility of a pullback during the course of the week. But we've only got 3 days after today left in the week, so that's unlikely. But of course, we have been outside of the channel since the open on Friday. And we've is it Friday? Yeah. So Friday's open. We've been outside of the channel, so you were able to look for H4 impulses on this. I haven't got any noted on this chart, but I'm pretty sure many of you guys have taken H4 impulse trades. This being a very obvious one here. What's that? Late yesterday, that should have gone on to hit take profit quite comfortably during the course of this morning. So just don't forget that if you are looking purely at the channels, there have been quite a few opportunities. But if you are also looking for a valid class 1 pattern, you'll be sitting on your hands, and there's nothing wrong with that. USD CAD on weekly, absolutely nothing for us to look at. Of course, that's represented by a flat market on daily as well. So despite the oil prices and Canada being an oil-based economy, we haven't seen much action there, which I found quite surprising. But I don't try and second guess the market, so that's all well and good. Weekly time frame on the Aussie, you can see last week we had a bearish candle bringing to an end this bullish impulse wave that's well within inside of the channel. So nothing really for us to do there. We did have previously a breakout. I think we spoke about that last week. That cyclicity absolutely broke down. If you were looking to trade an overlay on this, you probably already had a winner on that too. So bearish overlay, again, depending on how, what rule set you're using or what specific form of the rule set you're using. QE, last of our US dollar pairs, also on a weekly time frame, potential class 1 W pattern setting up over here, as you can see, waiting for the end of this, what potentially could be a phase 2, of course. Looking like this on the daily time frame. Again, if you are trading inside of the channel and you're trading the end of any phase 1 wave, this also would have been a bearish overlay that would have hit take profit either yesterday or this morning. So that's the Kiwi, but nothing else for us on this pair at the moment at all. Moving into our yen crosses, quite a violent turnaround we had that bearish breakout, as we mentioned last week. But through the course of the last week, we saw the market come straight back inside of the channel on the weekly time frame. And it's what it looks like here on the daily time frame. I remember it might be as much as a year ago, maybe 6 months ago, we had a market situation where we had these deep V's. We had quite long conversations about that. It's really worth paying attention to that. When you get a deep V shape, when you look like you're in a phase 2 wave, but you've got very impulsive price action behavior within that wave. For instance, 2 impulse candles, one after the other, through to last week. What's that? Monday, Tuesday? What is it? Sorry, last week, Tuesday, Monday and Tuesday, pulling back inside of the channel. Always keep an eye out for that. You know, phase 2 waves, if they are valid phase 2 waves, tend to have weak cyclicity and not strong cyclicity on the lower time frame. So the yen pairs have been pretty much a dud. Nothing really going on for us here over the last week. We did have that breakout that we discussed last Monday, but again, as you can see, we had the market pulling straight back inside of the channel. So nothing for us to actually do last week on these pairs. Swiss yen, nothing on weekly. On daily, yesterday we had the close outside of the channel. It's definitely not showing a lot of strength because we had a previous breakout, and yesterday's candle couldn't close above that high, so that doesn't bode massively well. It's also certainly not a class 1 W pattern outside the channel, however. So if you are looking to jump into any trades, you might have dropped down to the H4 time frame, but even here you can see we've had a breakdown in the bullish cyclicity, which means that that is over. Nothing for us to look at there at all. It confirms that we are effectively in a bearish phase 2 wave using dual time frame technical analysis. Doesn't mean it won't resume, but that's all we can see at the moment. Right, CAD yen weekly, nothing. This should be on the daily time frame. Also had a breakdown in cyclicity, so a similar picture to what we've just seen on the Swiss yen. Close outside of the channel on Friday. Continued a bit yesterday, but we've seen a breakdown in that cyclicity. It's pulled back quite significantly with this phase 1, well, phase 2 actually. So we've seen an end to that bullish cyclicity, and again, nothing for us to do except wait and see. It is outside of the channel. This was resistance and is now acting as support. If it does succeed as support, we should on both of these last 2 pairs see a resumption in bullish cyclicity at some point in the next day or 2. But we have to wait and see. Let's not second guess the market. Aussie yen on weekly, inside of the channel, but we've had 1, 2, 3 weekly impulse candles in a row, looking like this on daily. Now, again, this is not showing strength. In fact, if I'm not very much mistaken, I did look at this, the high 889, I beg your pardon, that's the high 508 compared to the close 514. So this marginally closed outside of the previous phase 2's price territory. So literally by a pip or 2, this is a valid phase 1 wave, but it's immediately pulled back inside of that price territory, showing significant bullish weakness at the moment. So if you're only trading strong trends, you'd be waiting for that. Likewise, obviously, you guys know that if we are inside an HTC channel, it doesn't mean that the trend is over. It can also, as in this case, mean that we simply have weak cyclicity. So nothing to do there either. And the same goes, I think, for the Kiwi yen, where also 3 impulse candles in a row, 3 weeks in a row. This one on the daily time frame, however, you can see how it has maintained itself outside of the HTC channel. So still in a bullish trend and a strong trend. Very important criteria to be able to note there. So we did have our an H4 impulse on this, which ultimately just made it to the take profit, and is subsequently, rolled over. We can see that this bullish cyclicity on the H4 time frame has broken down. We are technically still in a bearish wave on the daily time frame, represented by this bearish cyclicity. But so far today, it is respecting this as a support level. If that continues to be the case, then we will have a breakdown in the bearish cyclicity and a resumption in bullish cyclicity, giving us first an opportunity for potentially a bullish hybrid followed by bullish H4 impulse. So do keep an eye out on that. If it fails to give us a bullish phase one wave here and comes back down again, that would of course be a bearish overlay. So I'm sure you folks are used to combining these strategies by now. And if you're not, by the way, if this is all new to you, then please feel free to subscribe to our 3-day training course. It is free. The link for it will be included in the notes below this video. So do go and subscribe to our free professional trading. All right, Euro GBP, moving into our Euro crosses. We've had a significant pullback last week. Last Monday, we discussed the fact that we had a breakout here on weekly time frame. Well, that didn't last very long at all. It came straight back inside of the channel, and you can see another one of those deep V's. We were potentially looking for something of a retracement, followed by our final setup criteria here on the execution time frame for a daily impulse. And of course, we didn't get that, which means we didn't take a bearish trade at all. It kept us out of the market as it should have. So nothing else for us to look at there. Euro Swiss also came to a sudden end, another deep V. That's what it looks like, obviously, on weekly, but here on daily, this is the picture. So again, if you're conscious of the fact that we've got this strong bullish price movement with 2 impulse candles in a row again, coming back to that discussion we had last year on these deep V's, this may well be something that you stayed away from. But yeah, apart from that, if you did take a bearish trade on this setup, you would have been stopped out, but you immediately got a setup to go long as well on an overlay. So remember, the overlay does work. Well, certainly the gamma overlay is designed to work in conjunction with a core strategy to help make up for some of those drawdowns that we always have on convex strategies. That's how we introduce convexity at the account level as well. All right, Euro CAD weekly, so also pulling back strongly. It started the week well outside of the channel, so we were certainly potentially looking for a setup. Now, if you'd again taken this as a short on a daily impulse, you'd also be looking to go north on this now with a breakdown in that bearish cyclicity and trading a bullish overlay. That would be your next step. So Euro Aussie also pulling back during the course of this week. Another example, all of these Euro pairs looking very, very similar. And finally, Euro NZD, where we are obviously deeper inside of the channel there as well. And in fact, this is one of the trades where we do have we have a bullish overlay on this as we speak. And if you don't know what those rules are, then you should be a member of the GoPro Trading Academy. All right, so GBP Swiss, moving on to our pound crosses. Inside of the channel here on weekly, last week giving us that pullback candle represented by this breakdown in cyclicity here on the daily time frame, and also potentially another opportunity to go long on this with overlays. Remember, you just got to watch out for not overexposing yourself to too many instruments. Similar picture on GBP CAD with on the weekly time frame, but here you can see on daily we still have bearish cyclicity very much intact. So if you traded a daily impulse on this, you'll still be in that trade. Trade will just stop a little bit, I think, but you should still be short on this and get ready to just continue to manage that trade using the 2 5-step rule. Nothing else to do on this one at the moment though either. Having said that, the end of that phase 1 wave, yeah, no overlay opportunities, unfortunately, not on this pair. Right, GBP Aussie, all of these pairs looking very similar. As I mentioned, a change in conditions. Here's another one where we actually had a bearish daily impulse on this, got stopped out quite quickly, but we're into a bullish overlay, which will probably take the next day or so to complete itself. And then finally here on GBP NZD, very much inside of the channel on the weekly time frame, but a strong bearish impulse wave on that time frame, looking like this on daily, breakdown and sequentiality of cyclicity here as well. Remember, the open of a candle is not the same as a close. So this is phase 2, definitely a breakdown in that cyclicity. Right, moving on to our other pairs, CAD Swiss, we've left completely alone. Even though we got that bullish impulse candle, it did give us a breakout side last week, Friday. So Friday closed outside of the channel. If you're purely a channel trader, you will be noting that we've got the support level still intact. And if we drop down to the lower time frame cyclicity, you'll see that even though that is true, the bearish cyclicity is also intact on this time frame, waiting for a breakdown in that. So potential for a bullish hybrid here. So that's something that might be worth paying attention to. But some of these pairs are not as tradable as, for instance, the majors and the minors on the dollar pairs, and even often the yen pairs, although perhaps not at the moment. But if we are looking for valid trading opportunities, then certainly some of these are popping up. Right, Aussie Swiss, again, we've had 3 bullish impulse candles in a row up until the end of last week. And that's not the daily time frame. Let's look at the daily first. That is the case, but as you can see here on the daily time frame, we have had a breakdown in that sequentiality of cyclicity. We had a few trades here. One, as you can see, the most recent one was in fact a hybrid, bullish hybrid, got stopped out yesterday, I think it was, for a break even. So we didn't lose anything on it. We had that previous one, I think we'll probably discuss this one as well, which was a nice little winner on the H4 impulse. But again, you know, we've had that breakdown in cyclicity, so we step away from the market altogether. Nothing for us to do there. Aussie CAD here on a weekly, likewise in a bearish retracement wave on the weekly time frame. One thing you guys might be noting is that I've drawn in a wave on the weekly time frame before the end of this week. Some of you might not have done that because the week isn't over, and that's perfectly valid thing to do. I often look to, I do jump the gun a little bit on some of these when it looks pretty obvious to me, but it doesn't mean that I don't necessarily sometimes have to retrace my analysis. Okay, here we have Aussie CAD. Also, as you can see on that daily time frame, we also had that breakdown in cyclicity. So not looking at doing anything there. If you, one of the things I wouldn't mind doing here on the daily time frame is doing a daily overlay, but our limit order would not have triggered. It got pretty close to triggering yesterday, but it didn't actually trigger, which is a little bit pity. So that would have been a nice bearish overlay. Sometimes it just doesn't work out. All right, Aussie Kiwi on the weekly time frame, breakdown in bullish cyclicity altogether. So end of any kind of bullish trend that we had before altogether, and nice, perfect little double top, of course, if you're into trading that. And on the daily time frame, you can see that cyclicity, which we spoke about this a couple of weeks ago, in fact, that we had a daily impulse on this, which ultimately got stopped out for about 0.4 of our original risk. It was a good trade overall, but you can see that that resistance level that was formed during the course of that trade has been perfectly respected, and it's rolled over. So last week we saw the establishment of some bearish cyclicity, and yesterday, in fact, we saw a close outside of our HDC channel, setting us up for some bearish trades on this pair for the first time in quite a long time. But obviously looking at doing that on our execution time frame being the H4. Nothing yet. It's pretty choppy today. So our final selection criteria on the execution time frame have not yet been met on that one. Kiwi Swiss, also you can see 3 impulse candles in a row on the weekly time frame, dropping down to daily. You can see that that's given us an established bullish trend. Yes, the last couple of days, Friday and yesterday, we had a bit of a pullback. We did look to trade this, and that also got stopped out at break even. When was that? Right at the beginning of yesterday's trading, basically, early on in the day. So that was the end of that. It got pretty close, but yeah, all done and dusted. Doesn't matter. The point being, we stood to gain and we lost nothing by trying to trade that. Another point here as well, of course, is that we are on a phase 2, but we're keeping an eye on this bearish cyclicity because we may well be getting a bullish hybrid for those folks looking to trade that. It's also class one, potential class 1 W pattern stacking up. So keep an eye on that one. CubeCAD likewise. This is the daily, so let me just look at weekly first. Again, we've got 1, 2, 3 bullish impulse candles, except for last week. Last week giving us that pullback, that bearish high test. So looking at daily, you can see how that panned out. It was mostly Friday. We also had a bullish trade on this. This was an H4 impulse, and again, this one also got stopped out at break even. So good to be in those trades, but they didn't work out at the end of the day. So we are still in this bearish phase 2. It is today, and it has certainly respected the support level, as you can see here. So we're keeping an eye on that, and it looks like that in the next few hours, or the next 4-hour candle, we might well have a breakdown in this bearish cyclicity with a phase 1. We'd then be looking for that pullback followed by an impulse candle to give us a go. It's probably by then going to be an H4 impulse. Some people treat that as a hybrid, but either way, who cares? It's still a good trade. Right, so that's it for our currency pairs. I think everybody knows about the oil and gold pulling back quite dramatically through the course of last week and yesterday and today. Not that I jump into fundamentals, but I think everybody knows that there are some talks happening between Russia and Ukraine, but also there is some scary news coming out of China about the next phase of the pandemic. So all in all, that has pulled gold all the way back down again. We'll have a look at oil in a minute. I'm not sure why gold's coming down based on the pandemic, though. I think that should have pushed it up. But again, I don't second guess the market. I follow what the market tells me to do. Here we can see on the Dow, it's still overall bearish, no question about that, but it hasn't gone very far. That's the daily time frame. Weekly, you can see last week we did get a bearish impulse candle, but it's also a low test. So not much in the way. Well, if there is bearish cyclicity here, and there is, it's pretty weak. So not doing as much as I would expect, given some of these potential market shocks. Similar picture on the S&P 500. Similar kind of cyclicity showing itself on daily, just a bit cleaner. So for those folks, just going back to weekly quickly, recognizing that last week we got a close outside of the channel, you would potentially be looking for a short on this. You would have shorted this market at the open yesterday morning, and you would be in a bearish trade on this one already. So hopefully being able to trail your stop at the end of today. We took a trade only on the NASDAQ. This is the index that I prefer to trade as a rule. Tends to be a bit further ahead than the others and moves a bit more dramatically. All right, so weekly time frame, nice end to that retracement wave that we discussed last week. Last week's candle giving us a nice bearish impulse candle on weekly. We were keeping an eye open for that, and again, this market, let me just move that. There we go. So it looks a bit more like that. Shorted at the open yesterday. So that's where we got in. Nice little trade. Happy with that regardless of the outcome. Remember, that's not what it's about. Right, we were talking about oil. You can see that massive pullback, giving folks hopefully a bit of a breather on fuel prices. And looking like this on daily, an inverse V there as well. We discussed that on some of those other pairs. So we made some money on the bullish push, no question about that. In fact, it was our favorite trade up until last week. So when we got taken out of that, but we made really decent money on oil over the last while. Bitcoin's not doing anything. Some time ago we had a stab at shorting this, got stopped out of break even as well. Nothing doing at the moment. It's actually pretty flat. So that's that one. And finally, this really has been our trade or few trades of the last week or two. Happy with what's going on our US Treasuries here, 5-year US Treasuries, where we had a bearish trade on daily time frame. Should have a quick look at that weekly. So this is a bearish trend, obviously. As soon as we had reason to believe it was rolling over into the next phase 1 wave, we shorted this. It's a bit of a hybrid, to be honest, on the daily time frame, but that one's working out well. And we've actually now, for the first time, this morning been able to trail our stop into profit. So potentially still some way to go. We had a bit more action, obviously, on the H4 time frame. Another hybrid could be argued, maybe was it an H4? We still trailed the stop on this. I really thought we were going to get stopped out this morning. It came within a couple of pips of stopping us out on our 3-6 trailing stop, but it hasn't happened yet. So as you can see, we survived that pullback. We've survived a few, to be fair. There have been a couple, and yeah, well, in any case, this was one over here. We survived a pullback there as well. Although I don't think we trailed our stop there yet. I think we only started, as you guys know, when you're using the advanced targeting, we have a threshold that needs to be met before we start trading beyond the break-even point. And I think it only came after that. So looking very nice. This is currently sitting on at least a 4-to-1 reward to risk on initial risk on this one. Right, folks, well, that's it in terms of our analysis for this week. Again, apologies we didn't get anything out yesterday, but in some ways it's quite good to actually see how the markets have taken off again this week and give you a bit of additional information on that. As always, we focus on limiting downside. Make sure that you do that. It is the most important aspect of trading. And of course, it is what provides us with a convex edge. Focus first on limiting downside, and then you can let upside look after itself. Follow a rule set, be 100% consistent in doing that, and it's difficult to go wrong. All right, so that's it from me. If you've enjoyed the video today and this market review, please do hit that like button. If you're not already subscribed to our channel, please do that. Make sure that you subscribe and hit that notifications bell so that you will be notified when we bring out more material. All right, folks, have a great and safe week's trading ahead. I'll chat to you all soon. Bye for now.